All right, good morning, guys. Today's January 9th. Um, I'm a little sick. I have the coronavirus for uh, maybe 2 weeks now. I've been a little, can't really breathe well, so you just got to bear with me. Do my best, but I have to do it. So I'm going to start doing these weekly videos of goals and things I can improve upon and get better at, and just really how to uh, make the most out of the year. This is supposed to be 2025, mind you, but I haven't changed everything yet. Um, so I have a lot of goals. I have a lot of things I learned in the previous year, and I've been doing this for 9 years, and I'm always improving. Always will be a student of the market. I'm always trying to learn. I'm always trying to grow. I'm extremely open minded. I think once you in this game become closed minded and you feel like you figured it out, you never really figured it out. So I have made a little bit of adjustments going into the new year. 1 second, sorry. So I made a few adjustments going into the new year, um, which I should have did a while ago, but I fell into this home run mentality, which is essentially is not the best way to go about it. I think my discretion in trading is very good. I mean, discretionary trading is just a lot of screen time, right? Essentially, this pattern recognition of seeing the same things over and over again, and really, just having the eye to see it, stock selection, and kind of putting yourself in the best situation with stock selection. To me, is probably the best way to be a great discretionary trader, is understanding when you should be in, when you should be out, and when you really shouldn't trade, right? Or when you get out, you shouldn't touch it anymore. Um, so this year, I have a system. I'm mostly a system trader, but I think being purely a system trader has essentially I missed a ton of opportunity, right? Um, I found that in 2024, I was huge on confirmation, wanting to feel right before I even made the trade. Almost like, you know, when you know you're right, you want to get in. But I think essentially, certain, I want too much certainty. I almost want to know that it's going to be a winner before I even finish the trade. And that's kind of that home run mentality, looking for the best, ignoring the rest. But I think there is a downside to that. As much as I'm going to still have high conviction trades, correct? So, a high conviction trade for me would be an exhaustion gap, some type of really, basically in simple terms, some type of really big mean reversion type of setup on the daily chart, really deviating off of that mean at a very rapid pace. The rubber band effect up very fast, and then you just get that predictable pull on wider range bars, right? So that's going to be my high conviction play. The NVIDIA SMCI, MSTR. There was so many. SERV, Caesar. There's a lot. And now, as much as I waited for those, there was a downside. What's the downside? Well, if I'm just waiting, and I thought about this a lot, if I'm just waiting for high conviction plays and I'm not taking the singles along the way on the mediocre plays where I know is good, but again, I'm looking for that certainty, right? That conviction. But if I could get away from that on these mediocre plays, I could pad the wallet. And what essentially that does is it gets rid of the downside of waiting for just A plus trades. And what's the downside? Again, the downside is when the A plus trade comes, you feel that this is my moment to make money, and I can't. I must be flawless on execution, meaning I can't mess this up. Because if I'm only waiting for these, essentially I have to perfect them almost, right? There's no room for error because these are not many A plus trades, but when they do come, it's almost like if I'm just waiting for these, I must perfect these. And it puts a lot of pressure on you, a lot of emotion into the trade. A lot of execution errors could potentially come from just waiting for A plus. So I'm trying to, as much as I'm still going to play those are going to be my main plays. At the same time, I'm trying to have another way of discretionary trading on the side. So it's going to be systematic A plus trades, bigger size, discretionary trades based off experience and things like that, smaller size, about 2/5 the size. And just take those singles. I'm not trying to hold all day and become over patient. And sorry, I'm not trying to fade them all day, but I'm just trying to take what the has to offer me and move on. And the whole goal is with these is which I did this whole week is discretionary, discretionary, discretionary. Now, if say Friday, which I doubt it because there's nothing going on, but let's say if there was Friday a A plus trade and I'm risking X amount, I now have something to back me where I feel like I have room for error. Instead of nothing A plus, I have to make this work. If that makes sense. So I think the discretion on the side, about 50% discretion, and then the other 50% is the A plus trades systematic, is a new way of me taking my experience and my screen time and really capturing the mediocre plays that still give nice pullbacks. They still give trades. But I wouldn't say you overstay your welcome. And that's what I did on a lot of these. I didn't overstay my welcome. But essentially all I did was really just hit that other side of the V, right? Up, V, other side of the V, high day risk. That's literally all I did. Super stress-free. This was a wide range previous day, and these two are, I think, a wide range previous day and a day one and a day one. So that's just scalping. To me, it's scalping, right? I'm not holding all day. I'm just taking the predictable washes and I'm walking away with the set risk on really just the same pattern, the other side of the V. And I'm just padding the wallet. And as you can see, it's working, right? And then when the A plus comes, I'm comfortable because I have been actively trading scalps in my terms. To have conviction that I don't need to perfect execution on the A plus trade because I have room for error, right? So the biggest flaw of 2024 was really just looking for A plus, and it affected my bottom line. All right. So for this year, I really want to start hitting the discretionary, and then when the A plus comes, I've done so much A plus work of preparing for these. I'm very good at them, but I always did want to have some type of daily type of scalps set up for the padding the wallet, the consistent type of income type of trade. And then I'll wait for my easy money type of trade, and that would be probably most of my money, right? I'll make 10,000, maybe 3,000. I want to be comfortable making $2,000, $3,000, $4,000 on these trades, and not looking for 20,000, right? So, and then the home runs maybe 40,000, right? So you understand where most of your money is coming from, where to size, and you understand when to put exposure on and when to really limit your exposure, right? And that's going to be a big goal for me. And it's working out pretty well. I didn't trade all this week because I could not breathe. I was sick. Still fighting this, but we'll see. Okay, so, the first week scalping, I made 20,000. And I'm extremely happy with this. To me, this is great. Especially something that I'm new at. I just felt like 9 years in now, I should be able to discretionarily trade on the side of my system. Just from, I have so many hours, a very unhealthy amount of hours just looking at charts. And really all I'm doing is hitting that other side of the V. Very simple trade. So, 2024, 2024. The lessons are to respect small singles, right? Home run comes. The biggest thing when a home run comes, you want to be able to identify it. And on the other side of that is when there's a single, you want to be able to identify it as a single, right? So, in other terms, also something you want to identify as something that you could hold all day compared to covering to big washes, right? So it's all relative to each other that you just want to take those singles, those scalp trades on mediocre plays with less conviction, but good potential value. All right, and that's essentially what I'm doing on these names. I have two like type of more frequent names setups that I could use that V type of entry that's very consistent. And then I'll wait for the home runs. But in the meantime, I'm not going to size until they come, but I will consistently do my best to take these singles and pad the wallet, right? So, you know, 2004 let a lot of decent scalps pass by mainly focusing on home run plays. You know, the side effect of that was, yes, I had the patience to wait, which is good, but when things came, now it's my time to make money. Without singles backing my P&L curve, I had a ton of pressure to make sure I 1,000% execute these names flawlessly, which in trading you have to understand, flawless execution, flawless execution is literally impossible. It doesn't matter, it's impossible. It doesn't matter how much data you look at, how much you do. It's impossible. Just what it is. So, it takes a lot of pressure. These little singles take a lot of pressure off when this home run comes, because I know if the home run doesn't work, I have something backing it, right? So, another lesson I made, I had big picture mean reversion plays. I want to have more patience. Many times my PT was hit, I covered very early due to P&L, right? So, QUBT was just a simple green, wider range, deviating off that 1 hour trend, exhaustion volume type of pullback, right? Predictable pullback to the mean. And I covered for 20,000, but essentially if I held and followed the plan, I could have made 40. So I don't want to be, the outlier plays I find to be, they're very important to execute them in terms of patience and letting them really work for you, because it gives you room for error. So you don't want to be cutting yourself short and your bottom line short looking at P&L for outliers. You really want to let those work for you. Gifts from the market, you really want to take the most out of them, because there's a ton of meat to the downside and you would like to capture as much as possible. And so those big winners that I'm kind of cutting in half, just looking at P&L, is going to affect me long term, because it's going to give me less room for error. And the whole point of the outliers is it gives you room to make mistakes, which in trading is just part of the game, right? Another thing I want to work on is taking a starter on plays. Not the scalps, but taking a starter on the mean reversion trades. Because sometimes I would just take too big of a risk, and I would cut my P&L in half potential by the end of the day. So take a starter and add once it confirms it, right? If you have enough meat to the downside, to that daily range, that daily mean, which I use the 8 EMA on the daily. If you still have all that meat to the downside, that you should not have a problem adding into confirmation, right? If you know where it's going to go by the end of the day, ideally you could add. So there's no reason to try to top tick a full position when, if the stock's going to go a certain way as you predicted based off probability, you should be able to add into the winner, right? And not a reattacking bounces on multi-day runners. So you got the TIGR bounce that I didn't reattack. I also didn't swing that overnight, which is a swing overnight to the EMA of the daily. MSTR bounce, that H type of pattern, down, H, after 12 o'clock, break the trend. 12 o'clock, you make a new leg down often. And I'm not reattacking those, right? Which I should. And that's clearly because I don't want to give back profits, but essentially it is affecting my bottom line, because more times than not it does work. So a little bit of fear. Flaws, patience and premature covers was a big flaw. It's something I'm still working on. It's not the biggest problem in the world, right? It's really not, but it is also at the same time affecting my bottom line. And if I'm going to take this to the next level I want to, the patience and having those big outlier winners that $20,000 should be $40,000 is, it's essential. You have to be patient. Another flaw was ignoring the singles, looking for home runs, right? I want to do both. I want to hit the singles and also hit the home runs. Not letting singles pad the wallet for when the home runs come, in which obviously you can see I am slowly adapting and changing to do that. and two big starters, too big size, sizing too big on my starters, which is something I'm working on, right? Add anticipation, I guess you could say, some anticipation, and then really start adding on confirmation once the trend is confirmed. So the goals for me would be scalp singles, they add up, right? Patience on big picture mean reversion trades, right? Re-adding on the mean reversion at the bounce. So a lot of times on these mean reversion trades, you get the morning panic, and then you'll get some type of VWAP to red-green bounce, and then they're going to roll over. And I want to re-attack that for the new leg after 12 o'clock, which is very common. And I want to size accordingly to scalp plays and home runs and high conviction. So the home runs are just high conviction trades that over years I've seen, and you understand some of these things have extremely, extremely high win rates. Extremely. These price inefficiencies in the market like that, fighting for price when you get to a certain point, the conviction and the likelihood of them failing is extremely high. So the scalp plays like these, really all I've been doing is taking $2,000 risk, and it's padding up, right? It's adding up. Sorry. And I want to, when the home runs come, which is very far in between, sometimes you get 2 or 3 a month, 4 a month. Sometimes you get none, right? It's just those are the plays that really just come to you. You're gonna see them, and you're gonna understand when it's the time to hit size. With time, over time, seeing them, you'll know when it's time. And that's when I want to bet 5,000, right? Scalps 2,000, home runs 5,000, right? So that's part of my plan, is taking these singles and then sizing on the home runs, right? So the plan is to let winners run for outlier extension mean reversion plays. TIGR, MSTR, MVDA, SMCI, DXYZ, VXX, I think. There's a ton. And the B plays, right? These are just B plays, low conviction, but not more discretionary trading. So this is discretion, this is system, right? Discretion is the wide range previous day and the day one short squeeze. I prefer no pre-market action on those day ones. I just let shorts get completely blown out, let the charts form, and try to hit the backside of the V. That's it. If the daily big picture makes sense, right? So maybe, a reverse split name I'm probably not going to trade, or something like that. SSR, I don't like. I prefer no SSR, things like that. There's a lot of things, right? How thin is it? And I don't like thin names. I like things where I can control my risk. But again, it doesn't really matter, because essentially I'm playing smaller size, and I'm just letting the ones that work, and the ones that don't, cut. So it doesn't really matter. There's not much that really has to go into it. Just simply the other side of the V. Extension plays are the A+ trades where I'm going to be sizing up. And something also I want to start considering is taking long breakouts on hot sectors, momentum leading names in the market, which we had a ton, right? We had the Bitcoin, we had a little bit of everything. Kind of go where the money goes is something I want to work on. Not something I'm crazy about doing, but I would be foolish not to consider it, considering how much upside there is, right? As much as shorting's good, some of these hot sectors, when they really start going and they get the volume and they really start going sideways and tightening up, when they break out, there's a ton of opportunity, and there's a lot of growth, and you don't really have to take a lot of size. So this could be another not scalp, but another small size type of trade. And not everything deserves the same size, right? Like a lot of this stuff is this small size, and then my big mean reversion trades, my high conviction, that's where I'll size. So not everything is deserving of the same risk and exposure. What else? So another thing about the breakouts as well, kind of, you can consider, if we understand that, let's say TIGR, or no, not really TIGR, but let's say QUBT, if you understand the exhaustion gap short, the extension off the 8 EMA, when those things break out, you could kind of hold overnight and maybe even another day, because you understand more times than not, they get those extension, and you could kind of reverse engineer the short to kind of figure out profits for that breakout long. So you could really, really have some big winners on really small size. if you could kind of reverse engineer the extension short to likelihood of where it should go, expected value of that squeeze, and you know, so you could really get some big profits on the longs. But this is essentially the plan going into this year. Is really take the scalps, take what the market has to offer me, and then when the big trade comes, I'm going to be very aware of it and very ready, of course, and then I'm going to execute bigger on them. That's really it. And it's working, right? It's working. I used to never want to trade these things, but, 9 years in, you keep growing. And, my biggest goal was to take the home runs and really just prove consistency. In the last 4 years, I have proven that. But now I want to go into, all right, well, how do we really grow even more? And it's by a little bit of discretion. And a little bit of discretion is fair if you've been trading long enough. I think discretion's tough if you haven't been trading long enough, because discretion is essentially just experience. It's literally all it is. Pattern recognition. Your brain is a pattern recognition machine, but if you don't have the time into the game, I don't think discretion could be for you. But 9 years in, I think I could finally start doing it a little bit. And it's been paying, right? And it's very easy. I'm not randomly shorting it. I'm not randomly shorting it to strength. I'm waiting for a V. I'm waiting for some type of short-term time frame trend change and just patching that predictable pullback. All right, so I hope this was helpful. I'm going to start doing this weekly because I think this year is going to be one of my biggest years for growth. But it's going to take a lot of accountability. It's going to take a lot of work, and it's going to take a lot of coming here, admitting defeat. We all lose, guys. We're all going to have losers. But it's going to take a lot of coming here and improving. And over time, I think just doing these little things will slowly add up over the course of months, even to a year. And just really start honing in and really just try to make this the best year possible for myself. And I think it's possible, but I think this is the best way to do it is by really documenting it and being open about it. And I even shaved. I shaved for you guys for the camera. So you're welcome. But all jokes aside, yeah, I think it's going to be a good year. Day by day, right? Trade by trade, right? You gotta go trade by trade. You don't go to trade 50 if you can't complete 49. Take it one trade at a time. That's all it is. You don't gotta trade 15,000 tickers. You just gotta do one trade at a time. Remain humble, and of course, put that stop in and just respect it. Right? But yeah, that's it, guys. I hope this helped you guys. I hope it showed you my plan for more growth. And another thing I hope it shows is that even when you're in this game for quite some time, it's always a learning curve. You're always learning. It doesn't matter how long. When you think you figured it all out, you probably haven't. It's just a never-ending game of learning, from market cycles to just just mistakes you made on the day. You're learning, right? Every day you're learning about yourself, and you're learning more and more, and that's what the game is. So I hope this helped you guys, and see you next week.